Hey, everybody, welcome to my note for today. I wanted to talk a little bit about something interesting that I'm seeing in the coin space. Very, very cool in that volatility evolves over time depending on what the stock is doing. Of course, we know that, but lately what we've been seeing in the whole coin complex, whether it's MSTR, coin, a number of the miners, Bitcoin itself, just a reminder, everyone, of the disclaimer. So that anything we talk about today is for educational, entertainment, and information purposes only. We've seen that on rallies in the whole complex, volatility tends to rise. And that's pretty normal for something like gold, Bitcoin, something that is treated as more of a kind of safe haven, place to hide. And something that can explode higher. Volatility tends to rise on the way up, which is the inverse of typically how stocks work. VIX goes down as stocks go up, and vice versa. So we typically have volatilities going up, and we've seen that lately. Even on pullbacks in the Bitcoin names, we've seen a little bit of softening of option pricing, and then on rallies, we've seen it really jump up. Well, look today, we've got coin up 4.7%, up $14 to 316. And we actually have implied volatility at the 30-day level basically unchanged. It's just slightly up, nowhere near the jump that we normally see in this name. What's interesting about that is what I just mentioned. Typically, we will see a bigger jump, and to me, what that's saying is the market is getting more comfortable with these stocks trading within a certain range. It doesn't want to assign 120, 150, 200 implied vol anymore to things that are sort of trading in a more a kind of controlled manner, right? We don't have these parabolas happening anymore. So it's natural that volatility comes down. And it's being expressed here even on a rally. Now, where is that changing? Well, we're seeing the upside skew get pushed down. And I've been talking about on some of my shows and my recommendations, I've been saying, listen, if you own MSTR, some of these other names, not a bad time to sell some calls. We talked about that on one of my OP shows earlier. And sure enough, that upside call skew was paying you a whole lot in MSTR. And you're seeing that very interesting compression of that upside skew today in coin in particular. So look at this. This is where we were yesterday on the 25 Delta call, getting smushed down here, very, very flat compared to how it normally looks. So at the money, not being very reactive because people are more comfortable. Think of that as kind of the larger picture. The at the money is what reacts to kind of an overall view of things, which is, okay, we're not going to push up vol because we don't think this thing's necessarily going much higher and maybe not even much lower. But where we are going to move things around is at the money. We're going to crush any place where we saw a little bit of value. And the value, as I've been saying, is in selling that upside. If you own these things, you can really capture some upside call skew and sell those upper calls, doing covered calls and things like that. Other structures, of course, you could use as well. As sort of a butterflies, you could use ratios, things like that. But in very simplistic form, if you own the stock, you can sell upside calls, and they're paying very, very well. And I've been saying for almost 2 weeks now, I've been saying, listen, I think Bitcoin 100,000 acts as a kind of magnet. We sort of stick around there, maybe trade a little bit above, a little bit below. Let's take a look at where Bitcoin has gone. We've stuck around that 100,000. We finally pushed through the other day. We gave back a bunch of it. I said maybe we could get down to the low 90s and that would be support again. We didn't even get down there. We bounced back right away. So I think there's the potential for us to kind of stay within this kind of 90 to 105, 107 range. And that means volatility is not going to price in insane numbers of moves. Remember, there's a reality to where volatility is priced. So, MSTR and coin, for example, MSTR in particular, was a 200 implied volatility. Well, what is that? That's implying 12% moves per day, every day for 30 days, let's say. That's a lot of movement. Sure, it can happen on a day or two, but the option market is going to price in that when things are insane and when things calm down just a little bit, when the parabolas start to come back over the other side of the mountain, that's when the volatility market's going to say, okay, this is more controlled. We see a top being set. We see perhaps a level at the lower end being set because Bitcoin is still around 100 grand. So we don't think coin or MSTR are going to collapse. So we see a range, a reasonable range for things to trade within, and we are going to crush that volatility. So a nice trade there. If you took that, if you looked at if you watched one of my shows, compression of volatility. Now the overall vol down to 75. For me, I would say that this is starting to get to the point. I'm not there yet because I think we are going into this sort of quieter season, and maybe we stick around that 100 grand. I've even said on a couple shows and notes that I think we could sort of sit around there, maybe almost all the way till inauguration, but probably not. We'll probably get some action after the holidays. I don't know how much lower it can get. So I'm not sure if I'd be getting super, super bearish on volatility here because we've come down from the 200 level and we're down into the 75 level, still pretty high for your typical stock, right? That would be high for a J&J. But for the Bitcoin complex, these are stocks that really can move. So I wouldn't be getting super, super excited about selling a ton of vol in this complex at this point. And now we're seeing that upside skew react as well. So a lot of the edge is draining out of this trade at this point. So if you have done covered calls on this thing, I think you can let it bake off for a little while. Let me show you another way to look at this. Here's your skew coming down today, red being yesterday and blue being today, right? So we've seen that collapse, very unusual for this space, I'd say lately. And then let's look over here. This is where calls are more expensive than puts when the skew trades below the zero line here, meaning those 25 delta calls more expensive than the 25 delta puts. That's where we got where that skew was up there, and that was one of the reasons I showed this chart and I said, listen, this is where you can grab some value by playing the compression in these vols. Now look what's happening. We're coming back towards that zero line, which means the calls and puts are going to be a little bit more balanced, right? Perfectly balanced from a pricing perspective. And that's where we're sort of neither here nor there. The skew isn't really telling us anything. I mean, it's telling us that there aren't extremes happening, but it's not really giving us, I don't know if it's a lot of edge. Now, you could view, if we pop up slightly with puts getting a little bit more expensive, I think that starts to set up interestingly for the upside again, because suddenly the calls start getting a little bit cheap versus the puts. And then there are some structures that we can use to play that in particular. So hopefully that gives you an overview of what I've been talking about in this space, where you can find opportunity in the skew, in the implied volatility, and we'll see you in the next video.